Today, altcoins extend their gains after XRP is deemed not necessarily a security. Former Celsius CEO Alex Mashinsky pleads not guilty in federal court and faces a $40 million bond. Plus, EtherFi CEO breaks down the protocol's new NFT collection backed by staked ETH. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Major cryptocurrencies extended gains this morning following a sharp rally fueled by yesterday's ruling that Ripple's XRP is a security in some cases, but not in others. In the past 24 hours, Bitcoin traded above $31,200 and Ether hovered under $2,000. Then there's XRP, which rocketed 32% to trade at 78 cents. Cryptocurrencies broadly are on pace for a winning week. Bitcoin is up nearly 3% for the week, and Ether is looking at a more than 6% gain. Altcoins in particular were in rally mode this week, led by XRP, with Polygon jumping 25% and Solana popping 32%. Coinbase's stock even got in on the action, rallying as much as 40% just on Thursday. Okay, let's talk about the top stories. As Coinbase's stock swings in response to that ruling between the SEC and Ripple, the exchange's chief legal officer thinks its argument in its own legal battle with the agency is strengthening. In an interview with CNBC International, Coinbase's Paul Grewal said that the ruling that XRP is not necessarily a security on its face dealt a blow to the SEC's plan to regulate the industry.
But for exchanges, for tokens that are listed on exchanges, for regular investors, there's no question that this ruling strikes a blow to the idea that somehow securities are being traded when people go onto exchanges and trade the assets. I thought we would win before this decision. We think this decision has only further strengthened the case. And the reason is this was not just a casual opinion offered as part of a much wider dispute. This was an opinion that focused on the key issue in our case and in many other cases, which is, are these tokens, when they are traded on exchanges, securities transactions within the meaning of U.S. law?
Coinbase and the SEC held their first hearing in court on Thursday over whether the exchange listed unregistered securities on its platform. Next, former Celsius CEO Alex Mashinsky pleaded not guilty to federal charges on Thursday. Mashinsky faces 7 criminal counts, including securities, commodities, and wire fraud. His bail was set at $40 million, and his travel has been restricted. In the indictment, federal prosecutors claimed Mashinsky misrepresented the safety of Celsius's yield-bearing products and the company's profitability. In a statement to CNBC on Thursday, Mashinsky's attorney said, quote, "Alex vehemently denies the allegations brought today. He looks forward to vigorously defending himself in court against these baseless claims." We also told you yesterday about a separate legal action against Celsius. The exchange was ordered to pay $4.7 billion to regulators over a scheme to defraud investors, one of the largest fines in the FTC's history. Now, in a court filing on Thursday, Celsius emphasized that the agreement reached with regulators would not affect its restructuring plan with Fahrenheit, the consortium meant to take over the business. Settlement with the FTC will be paid after the company returns funds to customers. All right, on to our main story. This week, liquid staking protocol EtherFi dropped what it calls the first ever NFT collection backed by staked ETH. So Crypto World's Talia Kaplan spoke with the platform's CEO to find out how it works and what prompted the move at a time when total NFT market trading volume is down.
You're the CEO of EtherFi, a decentralized Ethereum liquid staking protocol launched about 5 months ago. Liquid staking allows people to stake directly on a proof-of-stake network like Ethereum and get a liquid staking token, which provides access to liquidity while the user stakes. Liquid staking is gaining traction, so I'm wondering, generally speaking, why do you think it's important and why do you think people are interested in it?
Yeah, liquid staking is a really essential part of the Ethereum ecosystem. So typically when a user stakes on Ethereum, they need a lot of capital to do it based on prices these days. It's about $50,000 to $60,000, and most, average people don't have that much Ethereum available to stake. And further, when you stake, you're locking up your capital. So in other words, you're not actually able to then use your Ether as collateral to borrow or really to do anything else with it. So what liquid staking does, it is a smart contract protocol. It allows you to deposit your ETH, stake it in a smaller amount than $60,000, and you can stake $10, $20, whatever you want, and then you get a receipt token that then allows you to use that token in other DeFi protocols as collateral to borrow against, or do other types of activities.
So clearly, there is one very dominant liquid staking protocol out there. According to DeFi Llama, your protocol now has more than $34 million in total value locked, meaning the overall value of crypto assets deposited in the DeFi protocol. But your biggest competitor, Lido, has more than $14 billion. That accounts for about 25% of all staked ETH in existence. It's important to note that Lido has been around since 2020, while your protocol just launched in February. But I'm wondering, what is your plan to compete?
Yeah, that's a great question. So Lido, of course, is the dominant player. They're by far the largest staking player in the world out of both liquid and non-liquid staking options. There's certainly a huge first mover advantage. We actually haven't launched. We only launched our customer-facing staking option this week. So although we announced our existence a few months ago and allowed people to kind of pre-register their deposit, which is where the 34 or so million comes from. But the actual staking mechanism only launched this week, and we saw a tremendous amount of demand. The retail-facing portion of our protocol is called EtherFan, which is actually an NFT project, and happy to talk about that. It's kind of a quirky, fun, gamified way of staking.
Yeah, we'll get to that in a minute, but there's a number of liquid staking protocols out there. So expanding on what I just asked you, why should people choose one over the other?
Yeah, that's a great question. So there's a number of things that differentiate EtherFi. EtherFi is the only staking protocol that I would describe as truly non-custodial. So in other words, we are the only protocol where the stakers get to control their own keys. And crypto, not your keys, not your coin. With pretty much every other option, you are effectively giving some level of control over the custody of your assets, whereas EtherFi doesn't require that. The second thing that I would say is very interesting about EtherFi is that we natively support something called restaking, which is a whole other universe that's opening up in the Ethereum ecosystem. And so, why should a customer care about that? Well, the reason they care about that is because they are likely to get higher reward rates, higher yields on EtherFi as a result, and there's less risk associated with it. There's never zero risk, but there's a lot less sort of risk surface area attributed to EtherFi than with other options.
So you just brought up risks. Do you think there are regulatory risks to all the liquid staking protocols? How are you thinking about the U.S. market now and into the future amid the increased enforcement action on the crypto industry by regulators here in America?
Yeah, great question. We don't allow U.S. customers for that reason. We think, and we're not the only ones that have this opinion. There's complete lack of clarity in the U.S. with respect to crypto. The approach that certain three-letter agencies are taking are highly kind of punitive and I think detrimental to trying to maintain the U.S.'s place as sort of the innovation capital of the world.
Where is staking going long term? Is it the on-chain protocols like EtherFi and Lido, or will staking move back towards centralized custodians like Coinbase? What is your outlook?
Well, what we've been seeing is definitely much more staking happening on chain. Lido already is number one, and I think that'll on-chain staking will continue to dominate. I actually, if I had to make a prediction, I think if we're looking forward 2 to 3 years, all the major centralized exchanges are going to shut down their own staking operations and just defer to on-chain DeFi protocols. It just makes a ton of sense. It reduces risk for those exchanges, and frankly, it's better for Ethereum because it's a lot more decentralized.
So you touched on this, but this week you dropped what you call the first ever NFT collection backed by staked ETH. Can you talk about what prompted this to come about, and do you think there's a real demand for this? I read that total NFT market trading volume fell by more than 50% when comparing the fourth quarter of last year to the first quarter of this year. So why NFTs at a time when it seems demand is down?
So there's, an NFT is a smart contract, right? It's just code. What we've seen so far in the NFT market almost exclusively has been people trading monkey pictures for sometimes millions of dollars and all kinds of other insanity and kind of gambly behavior. So that it doesn't surprise me at all that that's down. It should be down. It makes no sense. I think digital art definitely has a place in the world. But what we've seen is, mostly badly drawn art being used as gamble coins. Ours is a completely different category of NFT. It's a financial asset, and the category of NFTFi, sort of derivative from DeFi, is really in its infancy. I mean, if you think about all the things in the world that need to be tokenized and put on chain, if we believe that smart contracts are going to be the settlement layer of the world, the vast majority of the assets in the world make much more sense to tokenize as NFTs rather than as fungible tokens. If you're trying to tokenize a car or a house or a bridge or any other physical assets, NFTs make a ton of sense as the foundation for that. So that's really Ether.fan, which is our NFT project. It's an NFT collection. There's some digital art associated with it, but that's more just a kind of a signaling mechanism. The real value of it is that it is staked ETH. It really is. It's just a wrapped staked ETH smart contract that has a loyalty and membership program that rewards people for staking for the long term.
Okay, that's all for Crypto World this week. We'll be back again on Monday, so we'll see you then.